Hello, traders. Gary Wagner here. It is 11:20 in Honolulu, 5:20 in New York on Tuesday, 14th day of June, 2022, and this is the Daily Report for gold and silver. We have seen gold prices drop approximately $70 in the last two trading days. This is based on a higher probability that the Federal Reserve will be more aggressive in their rate hike that they announced tomorrow. It was anticipated that they would continue to raise rates by 50 basis points or 0.5%. However, according to the CME's FedWatch tool, it is now a 95% probability that the Federal Reserve tomorrow will announce that they have raised their Fed funds rate by 0.75%. Gold today is down $22, 1.20%, and August futures are currently fixed at $1,809.80. In terms of a percentage decline, silver is down the same amount as gold, down 1.2%. In the case of silver, that is a decline of 25.5 cents, taking September futures to $21 per ounce. Dollar strength continues to be a component of the lower pricing witnessed in gold and silver, both yesterday and today. However, in the case of today, it only accounts for about a third of the selling pressure. The dollar gained 0.3% in trading today and is currently fixed at 105.28. We're looking at a daily candlestick chart of August gold. We can definitely see that yesterday's action did cause technical chart damage. Not only did it break below this trend line that we've plotted, but it broke below the 78% Fibonacci retracement and the 200-day moving average. All three of these studies had a price point coalescing right at that same level, and that to me is fairly significant. If we have more pressure on gold tomorrow, we could certainly see it break below 1,800. 1,800 is our first potential level, but I believe that is an extremely minor level of support if there is more selling pressure, with the most likely first point of potential support at around $1,880. To do an analysis of gold pricing on a longer-term basis, we have switched to a weekly candlestick chart. The Fibonacci data set we are using for our retracement is much longer, and it begins when gold prices hit this low of $1,678. That is back in August of 2021, up to this year's high at $2,078 per ounce. This week, we have seen gold break through the 61.8% retracement at $1,830, and the 78% retracement aligns very closely to the bottom of the Fibonacci retracement set we used on our daily charts at 1766. So that is a plausible level around 1760 that we could see gold prices fall to before we see potential support in the market. I would look at around 1750, and that is based upon this week's low here. That came in during the last month, December of 2022. But the key is not going to be technical studies in the case of the next major move in gold. It is going to be how aggressive the Federal Reserve is, and we will get some indication of that tomorrow when they announce what they are raising Fed funds rates to, and comments by Chairman Powell. We will remain flat with no active trades. I think that the best policy is to wait to see what the Federal Reserve does before we implement any trading strategy. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow following the conclusion of the June FOMC meeting. Have a great day. Bye-bye.